Flood and hurricane risks are rising, as are insurance premiums. In part 2 of my interview with Dr. Robert Hartwig, the president of the Insurance Information Institute, he explains what is happening to property exposures. We also ask him for his thoughts on cyber and drone risks. Recently, you said the US National Flood Insurance Program was broke and was the reason for premium increases starting in April. What is happening to flood risk in the US?
Well, the National Flood Insurance Program is $24 billion in debt, and it has no hope of ever getting out of that debt until such time it charges premiums that more closely approximate the risk that it is assuming. So we've seen several false starts and stops in terms of trying to reform the program. The Bigger Waters Act of 2012, as soon as rate increases began to hit the market, we saw a hue and cry, and we saw a rollback of those rates. Take two happened in April 1 of 2015 with more modest rate increases as well as surcharges being rolled out. This will, over the long run, certainly help the solvency of the NFIP. Longer run, perhaps it could stimulate some interest in terms of private insurers in offering this market. But the NFIP, it's very generous to call it an insurance company. It is really right now a form of entitlement or a transfer program, mostly to coastal dwellers.
We see Citizens reducing its stake in the Florida hurricane market. What is the long and short-term impact of their withdrawal?
Right. Florida Citizens has now seen its population count drop to its lowest levels in many, many years, maybe even its lowest level in more than a decade. That is truly extraordinary. Many of these policies have been transferred to the private market, and in addition, Florida Citizens has tapped private reinsurance and the capital markets for coverage there as well. So the people of the state of Florida, the taxpayers of the state of Florida, are much less on the hook than they used to be. This is good news for private insurers at a time of relatively slow growth or modest growth. There are opportunities to grow in places like Florida, albeit a risky place, but also at a time when reinsurance coverage is both available and affordable. So it offers an attractive opportunity for some insurers who are willing to assume that risk.
TRIA was reauthorized in January. I think we all agree that was a good thing. But how does the federal backstop respond to losses from state-backed cyber attacks, or does it?
Right. The new federal law, TRIA, which will now run through the year 2020, does not directly address cyber risk, despite the fact that in numerous hearings there were calls to do so. The general view is that were there damage that would be ordinarily covered under a policy, such as fire, explosion, those sorts of things, that would be covered under a terrorism risk insurance policy, so long as it meets all the other definitions in terms of a terrorist attack. But if it's state-sponsored terrorism, we're in a very gray area. Is it an act of war? Well, acts of war are in fact historically excluded from basically all forms of property casualty insurance. So I think, unfortunately, there remains a bit of a gray area for certain types of terrorist attack, particularly if we're talking about state-sponsored attack, in other words, a foreign government. The question is it actually an act of war?
So is cyber still a big opportunity for insurers, and how is that market evolving?
Cyber is certainly a big opportunity for insurers. At a poll we took recently, about 80% of executives view this as a major growth opportunity for property casualty insurers and I think reinsurers. We're seeing a larger number of insurers roll these products out, not just in the United States, but also Europe and elsewhere. There's a huge demand for this, and the demand is coming not only from the Fortune 500, Fortune 1000 companies that you hear about suffering the data breaches. You're also hearing about it now from mid-sized and even smaller companies that are very interested in this product, and increasingly insurers are rolling out products that can be offered through not only brokers but independent agents. There are reinsurers offering programs that allow this risk, at least to some degree, to be reinsured, and so that's good news. So I think this product will become more and more ubiquitous as we move through time, but not just the risk transfer product. Insurers and the federal government, in fact, recently held hearings, are looking to insurers to help be one of the leaders to help mitigate the possibility of major damages arising from a cyber attack. So insurers are there not only to help transfer the risk, but to help individual policyholders assess their vulnerability, plug the gaps in their vulnerability, then provide insurance as a backstop for those events that in fact still do occur.
We're starting to see more coverage for commercial use of drones. What are the risks and how big does this market get?
Well, the commercial use of drones, very interesting right now. We're hearing about a larger number of companies, such as delivery companies like Amazon, perhaps. We're hearing about insurers talk about it for use in claims adjusting, and many, many other applications. And there are a few obstacles here, regulatory obstacles in the United States that, in fact, are driving companies like Amazon to test their drone programs in Canada rather than the United States. So we need to get through the regulatory hurdles here. But I think that when we look at it, there will be plenty of coverage available for the operation of drones. We have to think about the many potential liability situations that could arise, not only thinking about potential liability associated with injury to humans or damage to structures or damage to even the cargo that's being carried, but of course potential interference with commercial aircraft. That's going to be a major concern. But I think these are not insurmountable, and I think that as we gain more experience with these and as we dovetail these with new federal regulations that we know will come down the pike from the FAA and other federal regulatory agencies, I think this will be an imminently insurable risk and absolutely a growth area for property casualty insurers.
As always, Bob, a pleasure.
Thank you. Great to be here.
If you missed part 1 of my discussion with Dr. Hartwig, where he reviewed the impact of capital on the reinsurance market, watch it now from the RIN TV On Demand library.